Hi there, how are you? Welcome to the February 2022 edition of the Simic Report. Thanks for joining us here at the Bulimba Foreshore, down at the end of Oxford Street near the Bulimba Ferry. Stunning part of the world if you get a chance. Come on down, check it out. I know we're both thinking about it. We've been saying it off there about diving into the river, cool down. It is February, it is warm, but we've got some important information to go through in this Simic Report. So let's dive straight into it, if I use the term. Bernadette, what's happening in property management so far?
In the past, I've spoken about how January, February is our peak season in property management. Traditionally, this is the case. However, this year we have found that January has been slightly different to what it normally is. The amount of tenants that decide not to renew their lease and move on, we find about 60 to 70% normally. However, we found this year that 30% decided not to actually re-sign their leases and move on, whilst the remainder, 70%, decided to re-sign their leases. So it's a massive 180 turn, pretty much. It is definitely. Why this is the case is that obviously that we're all not surprised that the rental market has significantly increased in the past year. That was 2021. And we actually educated all our tenants and advised them of what is actually going on in the rental market, and also gave them a heads up that the possibility will be a rental increase as well. So a lot of our landlords did receive this rental increase. What we've also noticed is that a lot of tenants have decided not to move also is because of the moving costs, forking out the bond, and also the competition still in the market. So there is still a lot more tenants out there actively looking to rent a property versus properties actually available. So it's a definitely interesting market.
Yeah, big shift there. I mean, as you said, we spoke about it over the last couple of years with the number of investors and landlords selling off their investment properties. There was always going to be a shortage of stock for the tenants to look at. So the tenants that have re-signed the lease is still 30%. That's a significant change from the 60-70% most re-signing, and re-signing at higher rental amounts. They've been educated through the process. They've established the fact that if they were to go in the open market and find another property, they're going to be paying more regardless. And that saving up the bond and all the rest of it, it's not worth the exercise and the effort. So really good insight. Not surprised for us. We saw this coming.
Yeah, we did.
The media pundits were talking different talks, but we're now hearing through the media channels. It's funny how they talk about the real estate market, sales. It's interesting how in the last sort of through the January period, you're going to hear a lot about it in February, March, no doubt, about rental vacancy rates and rents going up. We've seen this happening for the last few months, so no doubt the media is now going to start catching onto it and then start spruiking it through their usual outlets. And that's been the case with sales as well. We finished the calendar year for 2021. There was a 27.4% increase in values in the Brisbane market. Phenomenal numbers. And that's being the inner east where we are, we're in the epicenter of that market. Do we expect to see that again through 2022? Highly unlikely. That is a once in a generation price increase over a 12-month period. So phenomenal numbers. We expect the market still to gain some traction and momentum through the calendar year, but not at the rate that we just spoke about. Now, we're not suggesting the market's going to drop or drop in value. We think it's just going to start to plateau out as we head through the rest of the calendar year. No doubt, as more indications about potential interest rate rises, pressure on inflation and all the rest of it like that might have an impact on buyers. Optimism about whether the time is to buy now or later. But this is the interesting thing, and this is the scary part about where we are in 2022 and the education piece. No doubt for sellers that are forecasting their decision about maybe do we sell this year is not to use the watermark. We use here the Brisbane River, the watermark of 2021. We can't expect another 27.4% increase on values. That's not the scary part. The scary part is having talks to agents, neighbours, friends, whatever it may be, or the media as well, of 50, 60 or 100 buyers coming through an open home and 30 or 20 or 10 offers on a Saturday. That's not a normal market. That's the reason we saw those values increase last year to the numbers that they did.
Exactly.
But having 10, 20 or 30 people through your open home and 2, 3 or 4 offers on a Saturday, compare that to any other market, not the watermark of 2021, that's a phenomenal outcome. But comparing it to 2021, it may not seem like a good number, so you just can't compare it to last year's numbers. So look at it on its merit for what 2022 will bring. We still think it's going to be a solid market with still some growth throughout the year, somewhere in the vicinity of 5 to 10%, and no doubt Brisbane's probably going to outperform the southern states, which has obviously been widely predicted through the press as well. Guys, we hope you find the information in today's video informative. We look forward to having a chat to you in the March edition of the Simic Report. We'll see you then. We're going for a swim.
Okay.